Hi everyone, this is Mayank and welcome back to my channel. So today we'll discuss about a particular sector and particular stock in that sector, that's the hospital sector. So recently I posted a post in the community post in the community tab, and I mentioned that the inflation has been on the medical side almost 15% CAGR. Okay, so insurance which cost around 6,000 rupees 2 years back, health insurance probably that cost around 8,500, 8,200 like that after 2 years, right? So this is again a personal experience. Now, this is across the sector. You said insurance, you said medical bills, you said hospitalization and everything. The charges inflation is same, right? So today we'll discuss about the particular sector, and we'll take example of a particular stock, saying that what the different terms they use, why the inflation is happening, and then we'll see the stock also what is kind of return what we can make and whether stock is a good investment pick or not. Okay, so this is purely a my personal opinion and research video. Okay, and I'll give an extra sheet also at the end of the video where I'll discuss the bull case, bear case, and hold case scenario. Okay, all the three cases, so you can analyze that sheet and then you can make your decision even better, right? So we'll discuss about that stock, but first let's talk about the hospital sector. So what's the last 3 years, right? Cost of hospitalization in every hospital has increased. If you see this particular, I'll show a screen. I'll show you one data. So if you see this article, it says that its article is on June 19, 2024. So almost 2 days article, right? So if you see major hospitals chains report increase in average revenue per occupied bed, right? So it's a metrics which hospitals use to show their progress. It's called ARPOB. We'll discuss this particular metrics in terms of the stock in picture today, or let's talk in discussion today. So few things I want to highlight here. If you see example of three things, basically three hospitals. So Max Healthcare reported a 14% year-on-year increase, or ARPOB figures, right? So this is average revenue per occupied bed, means how much they earn from a single bed revenue from a single occupied bed, right? So they earn around 74,500 per bed compared to 66,000 which was there for last 9 months of last year. Similarly, if you talk about Apollo hospitals, they earn around 56,000 now compared to 51,000 previous year, the same 9 month thing. So this is almost 11%. Similarly, if you go for Fortis Healthcare, they earn around 10.7% increase, which is around 59,870, almost 60,000 per day, per bed per day. Okay, and then which last year they were around 54,000. So you can see almost 10.11, 10.7, around 11%, 14%. This kind of prices increased in terms of ARPOB, right? And also, if you see, the hospitals are also increasing the bed. In spite of that increase in number of beds, the revenue per bed is very high. Okay, so if you see this particular thing, so you can say why this inflation is increasing, right? Because all the hospitals, and they are saying the rise of this cost is happening because they are raising a lot of price in terms of material cost and the machinery and everything. But and see, when these things increase the price, right? So the insurance sector, insurance company also need to increase their price. So if you see, there are three kind of rate cards. First rate card is for cash customer who goes to the hospital, take the hospitalization or any other facilities or services, and they pay the money. Other is insurance based customers. There's an insurance rate card, and there's something like government initiatives based customers which has a different rate card. If you see, the rate card difference is almost 20%, 15 to 20% in each of the scenario. Now 15 to 20% is not exactly the number for every services. It varies from service to service. The more specialized service you have, the less difference you will notice. Okay, so if you go directly, let's suppose 100 rupees a service, for you it's 100 rupees. If you go via insurance, the insurance company will pay 85 to 80 rupees for the same service. Similarly, if you go via government route, government will pay even 15-20% less than 80 rupees, somewhere around 60-65 rupees to the hospitals. The same service, if you see, that is marked almost 35 to 40% higher to cash customers than to your insurance or your government based schemes. That's the reason some very good hospitals which have specialized services and all, they don't entertain government based schemes, because then they have to reduce their cost by almost 30 to 40% for the government based schemes. Similarly, some hospitals don't even entertain insurance because their insurance rate card is much cheaper compared to your cash customers, right? So these are few metrics which you should keep in mind when you research any hospital stock. So first, apart from reviews of the hospital, apart from the kind of services they provide in the hospital, few metrics are very important. ARPOB, average revenue per occupied bed. Then your the ratio of the service what they provide in terms of government initiative, in terms of insurance, and in terms of cash customer. So that is very important metrics. There's something called allows average length of stay. That is also very important in terms of some services. Some person need to stay for 3-4 days definitely in a super specialty hospital. So there are a few metrics what you need to focus on when you research on the stock. Now consider these three or four factors. We'll discuss about today's stock. So the stock what we're going to discuss today is Yatharth Hospital. So I'll give you a reason why I'm going to discuss this stock with the help of some kind of computer analysis, and then we'll go deep into the stock and discuss more on that. And at the end of the day, end of the video, basically we'll have a bull, bear, and average case scenario in Excel sheet. Based on that, will help us to make a case out of this stock and see whether this stock is investable or not. So let's jump into the stock analysis right now. Okay, so let's talk about Yatharth. So first thing first, why it came into my radar. Okay, so the reason why it came to my radar is two important factors. What I see basically, first one is PEG ratio. The PEG ratio is 0.33, which is much lesser than what ideally should be. So that's the one reason why it came to my radar. And second, the reason is the sector. The hospital sector is something which I was looking for. It already rallied a lot, but still I was seeing that if there's any opportunity what we can find out, then something which I would like to discuss. So Yatharth came basically for these two reasons, and one more reason is that this company is net profitable. So they have a profit of 114 crores, whereas their debt is only 84.6 crore, and they have a lot of cash equivalent also. So this company is net profitable. This is one of the major reasons. These three are major reasons. So we'll discuss about this stock. So if you first go to computer and see what their looks like. So these are a few competitors. They are basically all of them are hospitals apart from Lalpath Labs and Polymedical. So Apollo is definitely a large cap. It's almost 88,000 crores of market cap. Max Healthcare is 87,000. Fortis Healthcare is distant third, almost 37,000. Global Health peer almost 37,000 crores. Narayana is 25,000. Lalpath and Polymedicure I'll not consider. But Yatharth is a small cap company which is 3,579, which is much more smaller compared to their nearest competitor, which is Narayan Hidale. Okay, Narayan is almost 8 times bigger than, or 7 times bigger than this company. Right, 6 to 7 times bigger than Narayana compared to Yatharth. So this also is an interesting point because there's a lot of room to grow, and also the P ratio is a very big differentiator. But since it's a small cap company, and ARPOB is much lesser than compared to other companies. So as we discussed in the previous screen, right? So these are the basically ARPOB of the market leaders. So if you consider those things, then Yatharth is lagging far behind. But the growth for Yatharth has been very good. So if you go to profit loss statement, if you see the sales growth has been almost in the range of right now 40% for the last year. Before that 27%, before that to 74%, prior to that 58%. Almost they are in the range of 40% on an average. If you see their sales growth, which is quite encouraging from growth perspective. If you go ahead and check what's happening here, so P is very encouraging, 31.3, where their ROC and ROE is also decent, 23 and 21 point something respectively. And the best part, debt to equity, always told you it's a profitable company. Debt to equity is very less, zero point 0.1, almost negligible kind of thing. The only part which is not very encouraging is the price to book value ratio. It is 4.12, which is, but again, it's a private hospital stock. So a lot of company has that ratio only. If you see other companies price to book value ratio, so their Apollo is at 12, Max Healthcare is 10. Fortis is very good at 4.85 compared to what like kind of growth it has shown, or the kind of size for Fortis it is. Right. Similarly, if Lalpath is not competitor, but Lalpath is 12.1, and Global Health is 12.56. Narayana Hrudayalaya is almost 8.78. So considering the other market competition, they are decent in 8.4.12. Okay. Coming to the sales, if you see, they are growing very good in terms of quarter on quarter. But December to September to December, there has not been great sales growth. Okay. But if you see yearly basis, the growth has been very good, right? 40% CAGR growth. Similarly, for net profit also, the growth is almost close to that, only 70-80% growth in terms of net profit. So number wise, this stock is doing good. Okay, one good part is the shareholding pattern. So the promoters have almost 66.5 for the increase from last quarter. Okay, almost little bit increase, almost 0.09, but still it's an increase. FIs has a good number of stock. The increase for 2.59 to 3.99, and DIs has 8.1 to 9.3. So almost 1% odd they have increased their holding in this company. Public wise, it's reduced from 22 to 20%. And also if you see the number of shareholders reduced from 51,000 to 46,000. So this public interest is getting out of this stock, and more DIs and FIs are coming to this stock, which is a good sign. Now, if you go to the document of this PPT, I'll show you the important figures of Yatharth here. I'll just reduce the size a little bit. So if you go over here, we'll see a few things. So financial highlight, if you see, the profit after tax increased by 17, like it's a 17.1% the profit margin growth. And then if you see from FY23 to FY24, their EBITDA has grown from 25.7% to 26.8%, right? And revenue finance cost also almost 29% growth. And then if you see these things, probably can go ahead and read what they are doing, right? But if you go into some important numbers which I want to discuss, these are the important numbers. So they have total of 605 beds right now, and the plan is to acquire two more hospitals in the coming 2 years. So they are target to increase the beds to almost 2000 beds, number of beds. So they have five hospitals right now, I think five or six, so they want to add two more. Occupancy right now, they have 57% net, it's 54% net occupancy in FY24 compared to 45% in FY23. And this is because it's less, because some of the hospitals are like the one they have recently acquired, is occupancy is not started. They started in May, so that is not part of the report. And one more they occupied in Jhansi or Orka or Orcha, some region. So that has 23% occupancy, which is ramping up now. So once these two things comes into full fledged flow, then the occupancy can go up to 65 to 70%. This is what they are targeting, because the Noida hospital is almost 89%. One more Noida extension is there, that is almost 70 odd percent. So they are targeting to reach everything almost in the range of 70 plus percent once everything becomes operational. AROPB, which is very important metrics, they are saying AROPB is almost 29.3 thousand after, at the current point, after around five of the hospitals completely operational. They increased by 8%, and they are saying the forecast that within 2 years, 2 to 3 years, this will definitely, as per the commentary from the management, they are saying this will touch 40,000 per occupied bed AROPB, right? And they are saying they are right now they're adding more and more specialized services, for example oncology, nephrology, so those kind of things are adding into their case mix. So this increase the revenue per customer, so the ARPO metrics, by 10 to 12%. So keeping all things intact, they are saying their average revenue can increase up to 40,000 per bed, and their margin can also, if not increase, can sustain at the level of 17% right now, and the net profit margin around 39 to 40%, something like that. So if you see here, these two important metrics, what I told you is, one is we discussed already, ARPOB. Other important metrics is ALOS. So average length of stay. It was 4.52 in last year FY23 quarter 4. And if you see quarter 4 24 increased 4.5 to 4.89. So basically 4.5 days a person used to stay. Now they stays for almost 5 days. And FY23, the overall FY, if it is 4.32, now it increased for 4.78. Almost half a day person is staying more. So these are very important metrics what every hospital we need to see when we analyze those stocks. Operational KPIs, you can go ahead and see, this is hospital wise they've given. The first is Greater Noida, second one is Noida, third is Noida Extension, then Jhansi Orka, and fifth one is consolidated. So you can go ahead and read all these things. ARPOB, for example, Greater Noida is 28,000, Noida is 25,000, Extension has 32,000 because this is the highest number of additional services, and 20,000 is for Jhansi because this is still picking up and the ramping of services has to be done. And then 27,000 is the consolidated, what they are saying, and this is going to increase because this Jhansi Orcha will come, ramping will be completed, it will come more customers. The new one they added, this is not added here, so this fourth only they have added. Fifth one they got in Faridabad, so that is not added here because the operation has started from something around in the May, and then they will add two more hospitals in the coming years, right? So all those things, when they all ramp up, the occupancy rate as well as your per customer average revenue per occupied bed will also increase, and ALOS also will kind of increase because they are trying to focus a lot on the specialized services. So one more thing they are focusing is they want to increase a lot of international customers. So they have done something like 150 plus kidney transplant, which they are saying around 90% of them were from international customers. So the realization in case of international customers is much more, and they also don't go for insurance. They can't go because they are not Indian citizens, and they can't go for government schemes also. So everything is in cash. So this increases their revenue margin contribution because it's as I told you, the uh, price on the cash is much more higher compared to insurance and government backed schemes. This is something specialties and all you can go in and read. They have this been specialized in nephrology, cardiology, etc. So this is not, I'll not go to everything and read here. So there are few key investors. Either 66.5% is their promoter holding, and some of the key investors are there: ICICI Prudential, Bandhan Mutual Fund, HDFC Mutual Fund, Motilal Oswal, Max Life has also invested, Kotak Mahindra Life Insurance, SBI Life Insurance. So some very good names you can see over here who trust this company and invested and believe in the growth of the company. So these things you can read in a brief. You see they have 5 hospitals right now, including Faridabad. Two they are going to add more in the coming 2 years, FY25 and FY26. So by end of 26 they will have 7 hospitals. They have total 1605 operational beds. When they acquire these 2 hospitals, they might go for around 2000 odd beds. Average revenue per occupied 28,000 is of now, and 4.78 is the loss. So this basically these 5 numbers are very important for us, which we can which will help us also to go and further analyze the Excel sheet which we are talking about after this particular section. Okay, this is the journey of the company starting 2008 and up to so far they have done these many things. Okay, you can go ahead and. So each hospital they given, so Noida Hospital 2013 incorporated to 50 bed capacity, and they are going something called greenfield expansion also. So if you see occupancy wise, Noida Hospital 89%, Noida Extension almost 44%, Jhansi is 23%. They want to increase to 40% by end of this year, and then your Faridabad just started up, and one more hospital should be there. I think it's Greater Noida. So that's 67% occupancy. So overall, if you see, if everything comes together, the occupancy rate will reach something around 60%. So if I consider these three things, right? So then based on this data, we can go to the Excel sheet and see whether what is the bull base and bear case scenario, bull base and bear case scenario for this particular stock. So let's see this Excel sheet. So this I have done analysis based on FY26 data or promises what management is saying. So if you see current metrics, the current total beds is 1609, occupancy is 57%. If you see occupied bed total will 917 something odd. Average revenue per occupied bed they told 20,000, but if you see the total revenue, that is somehow not matching. So I have deducted that 8,000. If you put 20,000 as the ARPOB, that somehow come to the revenue what they have posted for FY24. So considering that revenue and the occupied bed, the profit after tax becomes 113 crores. This is some crores. Earning per share, if you divide this by the number of shares, comes around 13.2. P ratio is 31.3 is the current P ratio, and current price 414. Now I've created three scenario: bull base and bear case scenario. In the bull base scenario, what I considered that after 2 years they get their entire all the beds ready. So 1600 odd is now, plus 2 hospitals around 200 beds each, which they acquire, or most likely they will acquire as per the commentary. So total they have 22,000 beds. Occupancy after they all become operational, expecting to reach up to 70%, which is normally the occupancy of any good hospital. So if in the bull case scenario, if they reach 70% occupancy, the total beds becomes operational as 1400, and they are saying their ARPOB will reach 40,000. And I'm again deducting that 8,000 from here to make the ease of calculation. Somehow I don't understand why, I'm not able to find why they are saying ARPOB is 28,000 and revenue is 669. That is not making sense to me, so I did this calculation. So considering that 32,000 ARPOB and total revenue comes around 1,635 crores, profit after tax comes around 277 crores, earning per share is 32.2. If you divide all these things, if you divide profit after tax by number of shares, 8.6 crore shares, you will get earning per share 32. And if all this scenario happens, then I'm expecting this stock to get re-rated, because 40,000, if the ARPOB comes, this will become very close to Fortis and Max, if not like equal to them. It will get very close to this kind of hospitals. So the P might get re-rated and it will not get 90 or 80 kind of thing, but I'm thinking that it will definitely go around 60 if the bull scenario persists. Again, it's a scenario based calculation. So if these things happens, the price what it can reach up to is 1939 as per the calculation, and it can return your profit of 368.19%. Similarly, the base case scenario, if you see that they reach the hospital number of beds, but the occupancy level still remains whatever now they have is 57%. It doesn't go to up to 70%, doesn't increase more than this. Considering that occupancy, their occupied bed comes around 1140, and ARPB, I'm thinking that they will increase at the rate of 10% every year, 10 to 12% increase in ARPOB. Then it comes around 30 to 30,000, and then if I reduce 8,000 from there, it comes around 25,000. So 25,000 becomes ARPOB. Revenue and profit after tax, if you see, then earning per share becomes 20.5. And I'm seeing the PE can also increase a little bit from here. 32 is very cheap, and if this gets the required traction, I can see some kind of expansion in PE ratio. So if you see this kind of PE ratio expansion, the price becomes 822, okay, which again 100% profit from the current price. And let's change the number and see if what happens if the re-rating doesn't happen, but number of beds and all those things keeps intact, then your price becomes 658. So you get around 58, 59% profit on that. So this is a 2 year, 3 year, 2 year kind of horizon I'm talking about. Bear case scenario that their beds increase, occupancy doesn't increase, okay, and then their profit, so ARPOB also doesn't increase, somehow they're not able to increase that. One of the reason I'm saying, because 40% of their entire revenue comes from government backed schemes as of now, and they are trying to reduce it going further. But for some reason, if bear case scenario happens and that ARPOB doesn't increase, then in that case what will happen, and the PE also doesn't increase, in that case what will happen, the price will come around 526, which is just around 27-28% higher as per the current price. So these are the three scenarios. Bull scenario can make a return up to 368%, but this is with the condition that the PE gets re-rated and they reach up to occupancy of 70%. Base case scenario is 57, the occupancy remains same, but they are able to optimize their total beds up to 2000, and somehow your PE ratio gets some kind of re-rating. I'll not say re-rating because it's a minor jump. So, and then you can get up to 100% return from here. So these are the few numbers what you can see, and this might help you to decide and make. So saying that, I'll say that you read the stock, do all the analysis from your end, then only decide whether you want to invest in the stock or not. This video was completely a personal opinion and research. It was never a recommendation. So I'll request you to do your own research before making any kind of decision. So this was the video. This was a small hint about the sector, how it operates, and how Yatharth is placed in between all their competitors. So if you found this video helpful, please do like the video, do share with your friends and family. And if you have any feedback regarding any stock, please do let us know in the comment section. Thank you so much for watching. Stay happy, stay safe.